So, today is August 22nd, 2025, and this is yesterday's trade breakdown. Today's Friday, yesterday was Thursday. I don't trade Fridays, and I was supposed to do this video yesterday, but I didn't have time. So, I'm going to go over it today and explain to you how I cut my loss in this trade that I took, which was a loser, obviously. And basically, when I woke up around 7:30 a.m., I saw price. This is NASDAQ, by the way, on the 5 minute. I saw price was on a downtrend. Right here, we got a low, a lower low, another lower low. We got a high, a higher low, another higher low. Right. We also got the 3 MAs above price, and right here they're lined up, and that's a good confirmation for us, indicating that momentum of price is pushing downwards. Right around 8 a.m., the market opened with an overlap. The overlap was initiated, and right off the back I see right here price create this supply zone right here. Boom, supply zone. We got a gap. Boom. And from here I was just waiting to see what price is gonna do, and price waiting for price to come back and either reject off my zone or break through the zone to see if the trade was gonna be valid or not. People are going crazy outside Friday. But then we see price come, hit our zone, and then the next candle, price pushes away from our zone, which is rejecting off the zone. So this is a good indication right here. Once I saw that, I was already looking for sales right here. Boom. And normally I will put my stop loss at the end of the zone, right? So like that is a little bit more solid just in case price decides to come back up and dance in the zone or consolidate in the zone before continuing the trend. And if price decides to break the zone, then we already know, okay, that setup was invalid because now price is switching directions or switching trends or is creating a new high from this supply zone. But for this trade in particular, I put my stop loss here at the top of the rejection candle. And right off the back, I'm looking for price to hit my 1-to-1, but I'm aiming for a 2-to-1, which is what we regularly aim for, which is 2 times the risk, right? So the next candle open, boom, and right here we're in the trade. But since I wasn't in my office during this time, I wasn't in the studio, I wasn't near my computer. I was trading on my phone, and by the time I flipped the screen to MT4, price was already down. So I got in actually a little bit late. So I got in like around here, right? Boom. Hold up. But first, put this over here. This is the entry. Oh my god. This is the entry, and I got in around here. So my stop loss was actually a little bit bigger than it was supposed to. So I was risking a little bit more than I was supposed to. And my actual 1-to-1 was a little bit further than it was supposed to be, which was like around here, basically. Right, so my 2-to-1 was a little bit further too, which is the thing that sucks when you enter late on your trades, which is why you should be by your computer and not trade on your phone when you're about to enter a trade. So like that you can get in right on time and execute right when you need to. Right, so right off the back, I'm in the trade. We got all the good confirmations. We got a gap. We got price coming to the zone, rejecting of the zone. We got 3 MAs above price, giving us an indication that price is pushing down. We got break a candle. Price is pushing down. Nice downtrend. Everything looks solid. Right from here, we're just waiting to see what price do. Price is coming down. Boom. I see this candle right here. And then this next candle opens up. Boom. No, I think my 1-to-1. So my 1-to-1 was here, right? But my original 1-to-1, since I got in late, it was like around here, right? And usually when price hits my 1-to-1, I'll usually bring my stop loss either halfway or break even. So like that's a risk free trade. But in this one, I didn't really have time to do that. And as soon as price hit the original 1-to-1 from the original entry, it just began to reject. So I was waiting for price to at least be around this zone right here, right? For price to be around this zone for me to begin to break even or look to get out the trade. But price literally wicked the original entry 1-to-1 and then began pushing right back to break even. So right here, I was just like, damn, I should have closed out, but it just happened so quick. Like price just boom, boom, like you wouldn't even know. So from here, price began pushing back to drawdown, basically past break even, went back to drawdown, and basically we're just consolidating in that area. Here we still have good price action. We got a high, a lower high, we have a low, another lower low. So right here I was still confident in the trade that okay, price could potentially still keep pushing downwards, continue the trend, and hit our original, well, hit our 1-to-1 since we got it in late and be around this zone or surpass it and hit our 2-to-1, right? So here I was just waiting. Price started coming back up. By this time, I was like, okay, price came down, and right now I'm starting to come back up. So here I was already, okay, you know what? If price breaks this high, breaks this recent high that it just created, there's a good possible indication or a good possible probability that price will continue. If it breaks that first high, price will continue to break this last high and hit my stop loss where it was at over here. This is my stop loss over here, right? And continue to change directions and actually begin to uptrend, right? Or just reverse from this point in general. Plus, it was about to be 9:30, which is the New York Stock Exchange, and at 9:30 when the New York Stock Exchange opens, especially on Nasdaq, price tends to be very volatile. It tends to either zoom up, grab liquidity, or zoom down, grab liquidity, or just price just pushes like crazy, right? And honestly, like during this whole summertime, especially on August, price action just been garbage. Price action been garbage. Oh, price action been garbage, and it has not been, price has not been going in my favor as often. Price has been slow. A lot of fake outs, a lot of good setups, and price has been faking out. It has not been going to my 2-to-1 as often. Price mainly been going for 1-to-1. Most of the trades that I've been taking, I just been seeing 1-to-1 get hit. Um, and that's about it. So this summer, price action just been terrible. Right, so right off the back, I see this. I see price come up to my break even, starts coming back down, and then rejects and start coming back up. So right off the back, I'm thinking, okay, if price comes up to this zone, to this high, and breaks this high, I'm getting out of the trade. Plus, we got the New York Stock Exchange opening in like 10 minutes. So right off the back, I'm like, okay, so the next candle opened and it did this. Boom. Bro, right through that last high. So I got out. I got out the trade, avoiding a bigger loss. So right here was my exit. My original stop loss, like I said, was up here. So right here I basically lost like $200, which is half, a little bit less than half of my original stop loss. And then the New York Stock Exchange opened. Boom. So right here, when the New York Stock Exchange opened, my stop loss would have got hit. Price would have came down to my TP1, so my take profit one would have got hit. My original take profit one from the original entry, and my take profit one from the late entry when I got in. But even though if I would have hold, my stop loss would have got hit first, so I would have been out the trade before price even dropped down and hit my 1-to-1 take profit. Then after that, the next candle open, boom, price broke the zone, now indicating okay, it's invalid. And then from there, price was just consolidating, dancing, and this candle literally dropped all the way down here and then rejected like crazy. We had some mean rejections. Price was just rejecting and didn't want to go down, right? And this was terrible price action, honestly. Even though it looked good at first when I woke up, we had some clean price action, but then after that, it was terrible. So basically, that's how I avoided this regular normal loss and caught out my loss short and got out this trade earlier to avoid this big loss right here where it's basically a normal loss. Yeah, it's by basically I saw price coming back up and created another higher low, a mini higher low, and price came down, started rejecting, going down, started pushing back up, and I was like, okay, you know what? If price breaks this last higher low that it created, that's an indication that price might continue to go up because now it's switching trends. Now it's breaking highs. And breaking highs, that's an indication of a new trend, right? Because now it's not downtrending if it's breaking structure to the upside. So right there, I decided to get out, cut my loss short, got out about halfway from my original loss, losing half of my original loss, which is good. And at the end of the day, New York Stock Exchange was about to open. And even though when it did open, I would have lost anyway. And but it's better than taking the full loss. Took half the loss, called it a day. Price was just being choppy. Price action was terrible. The summer has been trash, honestly. Price action been garbage during this whole summertime. And yeah, that was yesterday's trade breakdown. That's how I cut yesterday's loss. Um, and lost less than I was supposed to. Save my capital. And yeah, and live to trade another day. Live to trade another day, man. So I can't wait for summer to be over and for next month to come up. Hopefully, next month we see price action moving better and we get some better setups and make some more money. But yeah, that's today's trade. Well, that's yesterday's trade breakdown on how I cut my loss short. And hopefully, some of those stuff that I explained and just how I went about it can help you out on cutting your losses in your next trades. And yeah,